So I have a treat for you today because one of my top students turned legendary traders, Kyle Williams, just gave a great presentation at my conference talking about his techniques, talking about what's worked for him, what hasn't worked for him, his struggles, his whole journey, which now he's made nearly $5 million in just a few years, done the seemingly impossible after losing a lot of money in the beginning and blowing up. It's not all roses. But he's come so far and he's so responsible, so meticulous, and I'm just so proud of him. And I know that his journey can really help you. Hopefully it can, give you a kind of framework to follow, like all my millionaire students. I now have 30 plus millionaire students. They all come from my challenge. If you click the link below, you can apply for my challenge, but be dedicated, okay? Learn from Kyle, learn from Jack, learn from Tim Grittani, learn from Mark Crook and Huddy and Dom and Mariana. It doesn't matter who you are or where you are in the world. What matters is your dedication level. So watch this video, take notes, leave a comment below. Let me know if you're going to be dedicated. Here's Kyle Williams.
All right, teaching my younger self how to trade. Let's get started. So who am I? I always like to start off my presentation just because you never know who's in the room. Some of you may have been following Sykes for years, but if you're new, you might not know who I am. My name's Kyle Williams. I started trading in 2016. June specifically is when I joined the challenge with a 6K E-Trade account, and I was a sophomore in college, mainly because I just didn't know what I want to do with life. I eventually came across trading, and Tim Sykes was one of the first people I found, and I pretty much fell in love with the idea ever since of what trading is. So lost for the first 12 months, wasn't consistently profitable until the summer of 2017, and ever since then now I've accumulated just over $4.5 million in trading profits. That is the, thanks. So that chart, is my profit curve on Profitly, and it looks all fun and dandy now because it's straight up bottom left to top right, but you can't even see it anymore is the straight flat line, and it looks like a flat line, but that's not really what it was, right? It looked a whole lot like this from the get-go, pretty much down, right? Almost had a spike. That actual the intro that Ben gave about the stock popping up and me chasing alert and making money. And then losing, giving it right back is that little pop right there. Like I thought I had it, and then it was nothing but straight down, right? And as you can see, I lost about $4,300 at the worst. So by May 2017, I had enough, right? I was over it. I was ready to make a change and improve. And so if I can go back and try to reduce that curve for myself, right? Go back to the future, or back to the past in this case, after 7+ years, what could I have told myself to avoid that? I don't think I would avoid it completely. I do agree and think that every trader needs to go through some learning curve, which is likely going to be losses. It's unescapable. But I definitely think there are things I could have gone back to reduce that experience, that curve. Okay. So come prepared and study. Do not be like me. This is no joke. I watched 1 hour of penny stocking from Tim's guide, his first DVD, penny stocking. Literally an hour, and I said, yeah, that's enough. I closed the laptop. I was like, let's trade tomorrow morning. Very lazy, did not want to study at all, and it led to losses way much more than needed. I don't know an exact number of how much I should have studied or could have studied before to start. And I know most of you are probably better than I was at it in terms of just getting a better footing under the ground. But I would say a significant portion of those losses came simply because I just hadn't even watched a DVD yet. My first 3 trades were blind. I didn't even have the software up yet. I was that lazy, that kind of just immediate gratification, let's start trading. The one thing I'll say here, though, at the end is the pro of actually starting when I did is that it got me to trade. And the reason why I say that is because there's the flip side of this where, and I haven't had this experience at this conference, but I've had it in the previous past where some people come up to me and they'll say, I've been studying for 2 years and haven't placed my trade yet. And that's good, but the problem is you get into this cycle of you're never going to feel ready to trade. Right? There's a leap of faith you have to take is that you don't, like we said, we don't know enough to know how to trade yet. You kind of have to be that little child in the forest to figure out how to make tools, build a shed, build shelter, right? You kind of have to get started some way. And so that's the one thing where I am a little bit thankful I did because it got the ground running for me early. I learned very quickly, okay, you don't know enough, you need to start studying. And that was the more motivation because if you don't, I'm going to lose everything I have in that account very quickly. Right? Don't chase alerts. I think this is self-explanatory, but I know every single one of you in here have thought about it. Some of you still do it. You don't have to raise your hand. But I was one. Okay, I definitely did it. The quickest way to learn how to stop, chase, and learn is to chase and learn. Like, you'll learn very quickly. You will lose money in the long run. It is, unless you can literally be the person who's giving the alert, I promise you, you will not get the same entry, you will not get the same idea, the same thesis, or the same exit. And more than a lot of times likely, you'll take the losers that they take and not the winners, right? It's just not a game that you should be playing. It's all about self-sufficiency and self-responsibility. If you want to be doing it for a long time, I promise you, you can't rely on anyone else but yourself. Like I said, the best way to find out that you shouldn't chase and learn is to chase and learn. It's not fun losing money for something you're not responsible for. That's why I personally hate the casino. I don't like that we're here in Vegas. Sorry, all you Vegas lovers. I hate the casino because when I lose money, like I'll lose $3,000 easy peasy on any given trade. I lose $30 at the casino. I'm pissed. I'm furious. Why? Because I don't have a control over the game. It's the dealer's game, not mine, right? In the stock market, I can make my own trade plans. It's kind of my game, right? I'm more the casino. The market's coming to play, or I'm coming to play, but it's reversed, right? So stop gambling. On to the casino analogy, right? Stop playing guessing games. And I mean that because I played guessing games. My first few trades, even finally once I started studying, finally once I got a software up and running and wasn't blind, I still just saw a stock and said, yeah, let's buy this. Let's see how it goes, right? Oh, I heard a friend talk about this stock. Let's just buy it. Let's see if it goes up. I wasn't too afraid to short sell early on too. So, I think the stock's really crappy. It's going to go down. Let's just short it. Like that was it. That was the thesis. I had nothing else going for me. And again, the market doesn't care what you think. So like I can think all I want that, ticker XYZ is the best company in the world. But that doesn't mean a thing. Like no one cares what I think. Everyone should care what the market thinks. And so the pro tip to this though, and again, this is a double-edged sword, is that it got me to test and tinker. It got me to learn very quickly if I bought something that didn't go up, like, oh, that's what happens when you do that. Like that's what happens when you quote unquote gamble, play guessing games. You will lose money very quickly. And so there's a double-edged sword here where I say don't play guessing games, but some aspect you do kind of have to get your feet wet a little bit, right? You do have to test and tinker to know what it feels like to lose and to win and what it means. Because if you never do it, you're never really going to get that groundwork underneath you, right? Start small, trade small. This is a huge one. You don't need as much money as you think. You really don't. And the problem is that I think money is very subjective or personal to everyone, right? There's different emotional experiences and levels to how much people are willing to lose and take in terms of emotional pain or reward that people can have. But I would lean on the caution that you don't need as much as you think you do to make money. And this comes under the undercapitalization bias. And I've referenced a few people in my life that have had this, where they'll say things like, if only I had $100,000, I'd be profitable. Because they don't have $100,000, right? If only I was over PDT, I'd be profitable. If only my dad would give me this much money, then I'd start making money in the market. And I've always been in the boat of like, if you can't make $10,000, what makes you think you can make it with 1,000? Right? If you can't make an account, if you can't have 3-day trades per week on under PDT to make money, what makes you think you're going to make it with 30 trades? Like it's all about scalability. If you can't make one profitable good trade, there's no reason why it should be done with it, whether it's with $5,000 or $500. Granted, $500 is pretty small, right? But you don't need 50,000, maybe 5. Right? You heard Tim say that. If you have a $50,000 account, trade with 5,000 of it, right? I think smaller the better, and it keeps you safe. Because how much are you willing to pay for your learning curve, right? And a great analogy that I like to use for this is like, you can go to, maybe not an Ivy League college, a good example, but you can go to some private college, right? And you can pay $50,000, $60,000, $70,000 a year. Or you can go to a state college, pay $10,000 or $20,000 a year. Both people who go to either college can get an accounting degree. Is the accounting degree from the private college really worth 2 to 3x of the state college? I mean, maybe. I don't think so. And so for a learning curve aspect of learning how to trade, do you want to pay $100,000 in your learning curve or $10,000 in your learning curve? Right? Some of you can afford to lose $100,000. Maybe you're very well off. That's awesome. But do you really have to? Right? Same thing, even if you're smaller. If you have a $10,000 account, that's all you have to your name. Do you really have to lose all that money to go through a learning curve? And this was one of the good things that I actually did do, which is why I never actually blew up my first account. Yes, I lost 70% of it. Yes, my 6K E-Trade account went down to about like 1,700-ish. But I knew, I was like, I don't have to like, that's where, when you go back to the profit curve here, when I started bottoming out, is because I really hit that experience for me where I was like, I don't have to lose all of this money to learn it. Like I can lose way less and still learn. Like, and that's why I can't praise Bryce enough about losing $2 per trade, because he was getting the same lessons for $2 that the other guy next to him was trying to lose $2 grand for, right? Same lesson, 100x different in money lost, right? So again, you don't need as much money as you think you do. Okay, protect your chips at all costs. Like I said yesterday, you lose all your money, you're done. You're out. Yeah, you can go back and save, but how many times are you going to do that? Right? How many times are you going to be able to put some kind of defense in place to stop the losing, stop the bleeding, and kind of bottom yourself out to a winning, profitable strategy? But on top of that, be willing to accept risk. Right? Don't fall in the other pit of being so, I guess, sheltering yourself and so small to where you don't take risk at all. The reality is you have to take risk as a boy. If you think you're going to make $1 million stock market, never losing more than $1,000, call me. Let me know what strategy you're using, because I would love to know. Right? At some point, there is a level of risk you have to accept, but in the beginning, it's much smaller than you actually think. Okay? Find a setup and stick with it. Diversify later. Again, this was another thing I really like in how I did this, and it's something I would emphasize even further if I went to go back and do it again, which is you don't need to do everything in the market to make money. In fact, you need, again, way less than you think you do. There are hundreds of billions, if not trillions of dollars that flow through the stock market daily, and you're just trying to make $100. You're just trying to make your first 10K, your first 100K, your first million. And there's billions. Like who? Raise your hand. Who knows the difference between $1 million and $1 billion? Like catastrophically, right? What is it exactly? There's always a funny example people use. $1 million is like what? 32 days, and $1 billion. So sorry, if $1 was 1 second, 1 million is like 32 or 28 days or so, 1 month, and $1 billion is like 32 years. Okay. So to give you that, that's how much money's flowing in the market, and you're not trying to capture it all. You just need your first $10,000 win, or month profits, right? First 100,000, first $1 million. You do not need as much as you think you do, and in terms of that, you don't need to be trading everything. I've met many people who want to trade and be a part every single move in the stock market. Capture that move, capture this move. Oh, someone made money here. I got to do that too. You really don't. Really don't. You need your one setup, and your one setup alone can make you a lot of money. My first setup, panic dip buying, I believe over my career has made me $100,000. And more importantly, it was the only setup that made me a significant amount of money when I first started. Right? It got me to get my account over PDT, and then from there I learned setup 4, setup 5, setup 6, setup 7. Right now today I have, again, plus or minus about 10 setups, but I didn't start that way. I started with 2, and then 4, and then 6. Right? And it was a multi-year process to add on those setups. Right? It was not in the beginning, and I promise you, had I tried to learn all 10 when I first started, I would not be here, period. It's because I had 1 or 2, and I stuck to 1 or 2, even with seeing other people make money elsewhere. I knew they made money, that's great. You got to focus on how you make money, because that's what's most important. Live small to trade big, okay? If you want to be rich, you must let your money work for you. I think we all know that's very self-explanatory, but you can say that, but your actions might be different, right? And I'm no financial advisor, right? So I'm not here to tell you what to do with your money, but really define your goals of what it means and what you're trading for. And a funny example of this, I'll never forget this, one of a trader that I found or I knew of in the trading challenge had made his first 100K. And in the challenge chat, this is what, 6 years ago, he's like, I made a first 100K, so awesome. I'm gonna buy an $80,000 car. And I'm, again, do whatever you want. But for me, the idea for me to like throw almost my entire amount of trading profits on a car, I'm thinking about, well, now what am I going to trade with? Right? What am I going to pay bills with? Right? If you started trading full time at this point, right? For me, and again, it was a little bit too aggressive for me, but I wanted as much money as I possibly could in my accounts because I knew at that point when I had a profitable strategy, I wanted to grow it quickly. Not just quickly, but well. Right, to have a multi-million-dollar account, to be multi-million-dollars of trading profits, and I wasn't going to get there immediately wiring out the moment I had a profit to go buy something that really wasn't going to get me profitable in the long run, right? Again, car is nice, whatever goals you want are nice, but if it conflicts with actually your trading goals, be aware of that. Right, so again, I can reiterate that, but profitability or profitable trading will alter how you view money. And this is a very difficult thing to do because it's such a double-edged sword in my point of view. Many traders will start to view money as points versus real dollars. I am personally one of those people. And it is important to try to remember that it's actual money we're losing. Because again, back to the how much do you want to pay for your learning curve, it's so easy to desensitize yourself and be down thousands of dollars on the day and just have no emotional attachment to it. I don't think that's a good thing for a beginner. I think you want to be a little bit attached to remind yourself it's important and it's crucial that you actually manage your risk, right? Because if you didn't actually care, it's very easy to lose money, right? If you don't care about it, it's very easy to leave your pocket and go into someone else's. It only becomes real once you've wired out your accounts, right? And don't forget to pay yourself. That's what I'm saying. So back onto the point system, for me, I had to start really getting a habit of wiring out from the first 3 or 4 or 5 years of just constantly. I only wired out when I had to, like when I had to pay myself. Other than that, I was trying to live as broke as I possibly could and just keep the account going, keep it growing. Finally, after 2022 specifically, I learned how much losses are ahead of me if I just keep the account so big when I don't actually need that much money. That in 2023 helped me have a much better year because I just started paying myself. I let go of the idea that I need to have this big, massive account, and I just started wiring myself, not to pay myself, not to buy this or buy that, but simply just to have a nice chunk of change sitting in the bank, right? And so again, it's a battle that you have to figure out for yourself, and I think this is why the learning curve can be so difficult, because you have to care about the money to remind it's dollars, but also separate yourself from the fact that you can unemotionally trade and lose money and not be affected, to avoid revenge trading, to avoid making emotional decisions while still reminding yourself that this is real world money at the end of the day. So it's a constant battle, but the better you can get at it, I think the better you can get, obviously, at trading in general. Don't let trading attach to your self-worth. Okay, and this is a big one. I think a lot of people deal with this. I have certainly dealt with this. Too attached, profitable day means you're in a good mood. Unprofitable day means you're in a bad mood, okay? Separate yourself from the money and the attached to how well you traded, right? Don't worry about how much you're up or down on the day, but look at your process, right? Did I trade well? Because if you traded well, it doesn't necessarily mean you're gonna have a profitable trade. There are many, many, many trades I've traded very, very well, and they've been losses. They've been good losses. They've been necessary losses that are part of the game that are unavoidable, and I did the best I possibly could to make sure that loss happened as correctly as it could. Right, following my trade plan, okay? And again, vice versa, just because I made a ton of money doesn't mean it was a good trade. There's a ton of trades that I, say I made my first $30, $40, $50, $60,000 trade that I look back on, again, not knowing what I didn't know and what I know now, that were not good trades. It was way too aggressive. I was like, bending my rules thinking it was safe. The reality was if another scenario played out, it would have been way worse, okay? So just because you make a lot of money doesn't necessarily mean it's safe. I can't tell you how many times I've seen traders make a lot of money quickly thinking they're doing a good job, when the reality is all it was the market giving them a very generous and open opportunity, and the moment they were met with a kind of market-altering situation, they learned very quickly what they were doing wasn't correct. They likely, if they didn't manage the risk well, they give it all back very, very quickly, okay? So again, focusing on the process is gonna be able to separate you from how well you feel based on a monetary amount. I think the last thing anyone wants to do is start being insecure or self-conscious about your own identity and self just because you're not making money, as if money is the only thing in the world that matters, which is just complete BS. I think we all know that. Find things outside of trading that make you happy, right? Be a person that is part of yourself versus identifying into trading so hard that, again, if you're up or down money, don't let that affect your emotions. Don't let that affect how you feel about yourself. There's a famous quote, and unfortunately I didn't write it down, but it's from Brett Steenbarger. For those who knows his books, it's incredible. He had a quote along the lines of, no matter what kind of day you have, losing or winning, or even on the harsher losing days, you should never leave feeling like a loser, right? If you're constantly working on your process, constantly improving, constantly learning lessons, even if you lose money does not mean you should feel like a loser. In fact, you should feel kind of, at least from my opinion, whenever I lose any bad loss, I feel good. Like, wow, look how much I learned, right? I don't really learn too much when I win, right? Unless I find out later on down the road how bad of a loss it could have been. Like I said earlier. Remember why you started trading, okay? Are you trading to live or are you living to trade, right? Back to the goal aspect, why are you trading here? Put down your why. And I say this because it's so easy to want to go into trading because there's freedom, right? No 9 to 5, you don't have a boss, you're self-employed, it's the dream, right? The whole maximum freedom. But what do we find ourselves mostly doing? once we get in here, right? We're at the computer screens all day long, every single day. And again, part of that is necessary. To go through a tough learning curve, we have to kind of be able to sit our asses down for a very long period of time and just put in the work. So I get that. But once you get over that hump, once you say down the road, get past that learning curve and start making money, remember why you started. Because I know my girlfriend's shaking her head that I have a dream of why I started trading, but you know what I'm doing most of the day? All day, just sitting there. Don't even necessarily trading, but I'm there. Because again, part of it is obsession, but I do have to remind myself when it's good to step away, when it's not necessary for me to be there. And this week is a great week because I really did a good job of that. It's kind of why I'm kicking myself why I traded yesterday and on Wednesday, because I could have taken the whole week off and felt great about it. But again, remember why you started, okay? Start living or start to having trading of freedom and not being sucked so hard to the market that you forget why you have that freedom in the first place. Okay? How you trade will change, accept that. And this goes back to, I think, one of the questions we had yesterday about the panel of edges and living through slower markets and periods. Change is not natural to our behavior, but it's going to happen. And I'll give you a funny story about this. I have a buddy, best friend since high school. He moved, call it 20 minutes to a different location. Still same city, but across from the east side to the west side of our city that we live in. And he has a bank branch. Both locations. There's a location where he used to live and a location where he lives now. Guess what location he goes to? The one that he used to live at. He'll drive 20 minutes just to go to the same bank, because that's where he's used to going. He didn't want to change and just go to the same bank, but a different location. Okay? And again, that's an extreme case, but all of us are wired a little bit like that, right? It's always uncomfortable moving somewhere different, meeting new people, because it's change. We're not used to it. We're creatures of habit. And so that comes with edges, with setups. Like you're gonna outlive setups. If you want to trade for 5, 10, 15 years, expect to outlive a strategy, okay? Right, because otherwise you'll die without it. If you go in and this is such a predisposition to want to have a strategy, and like this is, again, it's great. One strategy, like I said, can make you rich, can make you $100,000, $1 million in a good period of time, in a few years. But don't attach to it in the sense that, I'm going to make this money for the rest of my life. Because maybe you will. Maybe some setups will be around that long. But have a little bit of expectation that you might actually want to outlive it. Because if you don't outlive it and it dies, you're going to die with it. Simple as that, right? I can't say enough about the panic dip buy. Panic dip buy was great, got me started, right? But 2019, after the first quarter, it died. Then 2021 came around, it came back, made a ton of money, and guess what? It's dead again. Been gone for at least a year and a half from what I've seen. Again, and maybe it comes back, but I don't expect it to. I've outlived that edge, and I'm okay with outliving that edge. Otherwise, if it didn't, right, I wouldn't be making money right now. And then the last point, if you want to play for 10 plus years, expect to outlive a strategy. You almost should want to, right? You almost should have a little bit of like a chip on your shoulder, like I want to be such a good trader that I get to outlive a strategy. I'm not identified to one thing, which again, in the beginning isn't crucial that you do. But when you get profitable and want to trade for a long, long time, expect to outlive that kind of first strategy maybe you found.
Amazing tips, amazing integrity, just honest about everything. And I love this. When you make a few $1 million, it's easy to kind of like get off the right track. But Kyle is just dead on, and I'm so excited and really looking forward to seeing what he's going to do in the future. He actually now helps mentor other students. He's given a few challenge webinars, but he also has Clover Trading. If you click the link below, we'll include a link to Clover Trading. And if you use the coupon code TIM10, you can save 10%. I'm so proud of Kyle and all of my Millionaire students. Watch this Q&A. We'll post other links below to other Q&As and other presentations with my other Millionaire students. It's really good to see just the wide variety of millionaires that have been created in just the past few years. It comes down to dedication and being meticulous and being open-minded enough to adapt to changing markets. It's not one stock or one pattern. It's learning a process, and that's what I want for you. So again, leave a comment below if you're going to be dedicated. Leave a comment below. Thank Kyle for his openness and wish him well, because the future is his, and I'm really looking forward to seeing what he can do into his 30s and 40s and 50s. He's already a legend, but I think that legendary status is only going to grow.